Hello and welcome. You are watching BloombergQuint. I am Pradeep Pandya, and joining me now is Dr. Ashok Gulati, India's noted agricultural economist. Dr. Gulati, welcome. Thanks for taking time out for us. You're coming from a panel discussion where you talked about slow growth in basically farm income levels in India, and we have felt that. We have felt the repercussions on the other sectors. We have seen the rural demand not really going up significantly. Now the question is, if you look at the plan after plan, the budget after budget, agriculture is always on the top, and every government says this is our priority.
In talking.
That's how you feel.
You need to do major policy changes in agriculture, and you need to put in your money and leverage the private sector money, right? Okay. So unless you do that, just making political statements, because that's the largest constituency for your votes, is not going to take you very far off. So saying that we will double farmers' income in 5 years, how do you double? You need to straighten out the incentive structures for farmers. That means they must get remunerative prices. The story today is even the MSP for 17-18 crop, Kharif crop that is in the field right now, there are number of crops by government report, CACP report, it's on the website, one can check, that the MSP is lower than cost C2 of cotton, of soybean, of moong, of urad, and many other crops. They are very, very thin margins. And the election manifesto had promised 50% over cost. If they get even 10%, 15%, and wherever MSP is there, the market prices of oilseeds, pulses fell below MSP this year. So actually he is even worse off than MSP.
So if the MSP is not fair and remunerative, where we are kind of trying to move, what happens? What kind of future trend do we see?
Where is the incentive? That's why there is a lot of distress in number of pockets in rural areas. And that's what is leading to one of the reasons to a sort of loan waivers as a salvation or as an atonement of the sins of not reforming the rural sector, especially
So before we come to the debt waiver, and actually if you look at the macro picture, it has been benign that way. So say monetary regulator, RBI, or the government doesn't really need to bother about farm inflation now as compared to what the situation was say 2 to 3 years back. So do you think this is just a breather that we have got, and given the policy framework like you just mentioned, probably inflation will be back, production will actually fall because it's not remunerative?
If you are not getting what your cost is, are you excited to do anything? Now you cannot quit immediately, because outside you don't have skill, therefore you can't move to higher productivity jobs, and what you can do is be a coolie or somewhere. Is that the life we want? So there is a massive skill formation needed, and we need to make 100 million people out of agriculture. But not push, it should be a pull factor. When they are pushed out and become coolies, that's not what the country wants. You give them better skills and they go to higher productivity jobs. That's the process of development.
So I also heard you saying that probably 80% of policy system is kind of geared up only to focus 20-25% of the value-added areas. So has government got the priorities wrong?
This is not the fault of this government. This has been all along, because this country had experienced tough times in 1960s, mid-60s, and somehow that mindset still stays. So when you talk agriculture, you go and survey, 80% of the people will say it is wheat and rice. But wheat, rice and all cereals together plus pulses don't account for more than 23% of the value of agriculture output. We don't talk about livestock, which is 25% of the story. We don't talk about horticulture, which is another 18-20% of the story. So I think half of your agriculture today is coming from basically livestock sector and fruits and vegetable sector, and they should become a much higher priority in the policy making, in the investment decisions, and that's where the private sector can come in a big way, and that's where the business opportunities are. When you become rich, You don't go from 4 chapatis to 6 chapatis. You go from 4 to 2, and at my age you consume only 1 chapati. And what goes up in your thali is more of milk and milk products, meat products, fruits and vegetables. That is what is more nutritious and better for the country. And that's what has happened in all other countries, should happen in India. We are slow because our value chains are fragmented, and therefore farmer suffers and consumer also suffers. Consumer pays a higher price and farmer gets a lower price because your value chains are totally fragmented.
So that's correct. I mean, even in those years when we had very high food inflation, actually economists would say that this is not a food inflation, this is actually a protein inflation, so to say. So have we really corrected the course or not?
Well, that was being said when largely pulses went through the roof.
Milk, meat and
milk and meat will go by where the demand pressures would be more. That's where inflation would go up, and if income levels are increasing, that's what. And the response can come. So pulses is a very typical case, classic case, where last year the prices that the consumers were paying was like 170, 180 rupees a kg for tua. And then all the farmers went to produce that as if those prices are the ones that are going to remain. 50% increase in tua production, and prices collapsed. They went below the minimum support price. Government tried to procure, not enough. MSP was 5050 and market price was 4,000, 4,200, even 3,800 it went to. Exports were banned. Private sector was not allowed to hold stocks. Futures were all suspended. So you have strangulated the market. Prices went so down that farmer did not recover his costs. So he has burned his fingers, and next time he says, thank you very much, I don't want to grow this.
So now actually if you see, when I started my economics in my college, actually that was mid-90s, and we were told the same story, that it's 1 year is very good, you have bumper crop, and next year then the production slumps. So in 25 years or so, I mean, look at the economy where we have reached in terms of GDP, per capita income. So I think the farm sector is not at all really benefited.
Yes. If you keep repeating the same mistake, same problem with same solutions that you did 25 years back, may not give you results. Why do you expect different results? It's stupidity. World has changed. Canvas is changing fast, and the policy instruments also have to change fast. Today you have all the wherewithal to reach directly whom you want to support in his account. Direct DBT you can do. Why don't you do that for farmers? Why don't you do that for PDS? 145,000 crores of food subsidy. 40% of that is leaking away with massive corruption and inefficiency in operation of food. Why don't you give whatever and whomsoever you want to give directly into their account and let the markets do their job?
So in terms of price discovery and price indicators, if you see, back then we didn't have futures market like the way we have today. But that doesn't seem to be
Where do we
working.
have? At the drop of a hat, we ban the future markets, we suspend. What happened, you look at since 2003 onwards, it was in 2003 Vajpayee government took the big decision to bring back commodity exchanges and allow all those things, and see how many bans have been put at the drop of a hat. And today, futures, our future contracts in agri are 22 million. China is at 1 billion. Okay? We are not even a drop in front of those countries which have done that. So we need to learn, and we need to identify commodities which are less sensitive, but then give them a free hand. Here, the moment price goes up, oh, somebody is hoarding, and therefore send an inspector this, that. Business cannot be done that. If somebody is hoarding, why don't you allow imports to come and compete and finish him off?
So you want stability. So one last question, the debt waiver, do you think it will really boost consumption in rural areas? Will really, the farmers will be better off?
Very temporarily, it's a relief. It's a breather for the farmer who was getting pushed. But I must say that there is a dose of appeasement there too. Because when the Prime Minister himself went to UP election and announced in the first cabinet meeting, we will do this, that was sowing a seed for loan waivers. And it is spreading. But all said and done, there are pockets which needed relief because they were under acute stress after 2 years of consecutive droughts. And we are forgetting. So how much loan waiver is an appeasement and how much it is an atonement of not attending to the needs of the farmer? It's a heady mix of the two. And unless you reform agriculture, this is not the first time loan waiver has taken place. This will not be the last time. It will keep recurring unless you fix your agriculture first. But in the short run, farmers feel only those who have taken loan, 40% of the farmers take loan from informal sector. So they are left high and dry. And then this is going to shrink the investments in agriculture. And that's what my danger is. It is going to slow down the engine of growth.
Well, thanks a lot, Dr. Gulati, for joining us. And thank you for watching BloombergQuint.